If you bought a house with less than 20% down, you're paying private mortgage insurance, PMI. It adds anywhere from $50 to $200 to your monthly payment. And here's the thing most homeowners don't know. Once you have 20% equity, you can drop PMI. But your bank won't volunteer that information. In fact, they'll often say no the first time you ask. In the next 7 minutes, I'll show you exactly how to force them to remove it, without refinancing, without paying fees, and even if they push back. First, let's understand what PMI is. It's insurance that protects the lender, not you. If you stop paying your mortgage, the bank gets paid by the PMI company. You pay the premium, the bank pays nothing. Once you owe less than 80% of your home's original value, that's 20% equity, the bank's risk drops significantly. Federal law gives you the right to request PMI cancellation at that point. So how do you know if you have 20% equity? There are two ways. The first is based on your original purchase price. If you bought your home for $200,000, you need your loan balance to fall to $160,000 or less. Look at your most recent mortgage statement. Find your current principal balance. Compare it to your original loan amount. If it's 80% or less, you qualify. The second way is based on your home's current market value. If your home has gone up in value, maybe you renovated or the neighborhood improved, you might have 20% equity even if your loan balance hasn't dropped enough. In that case, you'll need an appraisal. That might cost $400 to $600, but if it shows your home is worth more, the savings from dropping PMI will pay for that appraisal in just a few months. Now here's the step-by-step process to drop PMI. Step 1. Call your loan servicer. That's the company you send your mortgage payment to. Ask them for the exact requirements to remove PMI. Write down everything they say. Step 2. Send a written request. Do not just call. The bank will lose your phone request. Send a letter by certified mail. In the letter, state that you believe you have 20% equity and you are formally requesting PMI cancellation under the Homeowners Protection Act. Step 3. Provide evidence. Attach a copy of your mortgage statement showing the loan balance. If you're using current market value, attach an appraisal or a broker price opinion. Some banks accept a simple comparative market analysis from a real estate agent. The bank has 30 days to respond. If they approve, PMI comes off your next billing cycle. If they deny, they must give you a written reason. That's where most people give up. Don't. If the bank says no, here's what you do. First, read their reason. Common denials: you haven't owned the home long enough. That's not true after 2 years for most loans. Or, we use our own valuation. That's fine, but you can challenge it. You can request an independent appraisal at your own cost. If the appraisal supports your equity, the bank must accept it. If they still say no, file a complaint with the Consumer Financial Protection Bureau, CFPB. That agency takes PMI violations seriously. One complaint often resolves the issue within weeks. Now, what if you have an FHA loan? PMI works differently. If you got your FHA loan after June 2013, you pay mortgage insurance for the life of the loan, unless you put down 10% or more. That's the bad news. The good news: you can refinance into a conventional loan to drop PMI. If interest rates are similar, refinancing could save you that $100 plus per month. Let's do the math. Say you pay $100 per month in PMI. That's $1,200 per year. Over 5 years, that's $6,000. Over 10 years, $12,000. That money could be in your pocket instead of the insurance company's. The 1 hour it takes to write a letter and mail it could save you thousands. Your action plan for today: pull out your most recent mortgage statement. Find your original loan amount and your current balance. If your balance is 80% or less of the original, write that letter right now. Use certified mail. Mark your calendar for 30 days. If they say no, come back to this video and follow the complaint steps. Most homeowners never ask. That's why banks keep collecting PMI long after they're entitled to it. But you're not most homeowners. You just learned how to stop overpaying. Thank you for watching. Subscribe for more practical home finance guides.